Today I'm excited to share with you some of the most valuable finance lessons I've learned over the years. Lessons that can truly change the way you approach money. Managing finances isn't something most of us are formally taught, especially in school. Yet it is essential for achieving stability and peace of mind. Whether you're just starting your financial journey or you're looking to improve your existing habits, these insights can help you make lasting and positive changes. So let's dive right in. First, let's talk about something that might surprise you. Understanding your money mindset. Money isn't just about numbers, it's emotional. How we feel about money is often shaped by past experiences, especially from our childhood or family attitudes. For example, if you grew up in an environment where money was scarce, you might find yourself feeling anxious about spending or even saving. On the flip side, if you're raised with financial abundance, you may see money as a source of freedom and take on more risk. These emotional connections can influence us in subtle and sometimes irrational ways, often without us even realizing it. One example of how emotions can affect us is the sunk cost fallacy. This is when we keep throwing money at something, like a project, hobby, or even a relationship, just because we've already invested so much into it, even if it's no longer serving us. Recognizing this and other biases can help us make more objective financial decisions. We also see cognitive biases when it comes to discounts and sales. You might notice that a product is marked 40% off and seem instantly more appealing, even if it's not something you truly need or something you went to buy in the first place. Framing your financial goals in a positive light can make a big difference too. Instead of thinking of savings as a sacrifice, think of it as building some more secure future. A choice that supports the life you want to live. It's remarkable how powerful these shifts in thinking can be. It's also essential to remember that social comparison can be a big trap. It's easy to look around and feel like everyone has something that we don't. We're constantly being bombarded with images of people on luxurious vacations, driving flashy cars, or buying big homes. But the truth is, we rarely see the full picture. People often only show the highlights, not the debt or the stress that might come with their lifestyle choices. Instead of comparing yourself to others, focus on your own goals. A helpful way to combat comparison is by setting your own personal milestones. Track your progress, not someone else's. This mindset shift can help keep you on track, helping you stick to your financial priorities without getting caught up in what others are doing. Now that we've touched on the psychology, let's get practical with budgeting. Creating a budget may not sound like super glamorous, but it's one of the most powerful tools that you can have in your financial toolkit. A budget gives you a clear view on where your money goes and helps you keep balance with what you spend and what you earn. To get started, calculate your monthly income after taxes. Then, list out all your monthly expenses. This includes fixed costs like rent or mortgage, utilities, and transportation, as well as variable costs like groceries, dining out, and entertainment. It might be helpful to track your spending for a month or two to get a more accurate picture. Or you can use a financial tool like Monarch, not sponsored, that you can plug all of your bank accounts, credit cards, and everything into, and it'll actually categorize your spending and keep track of it, and you can even build a budget in there. It's really helpful. I use it myself. Once you have everything laid out, compare your income to your expenses. If you're spending more money than you make, look for areas to cut back. Maybe it's dining out less, cancel some subscriptions that you don't really use, or find cheaper alternatives for services. The goal is simple but powerful. Spend less than you earn. A lot of people think budgeting is restrictive, but in reality, it gives you the freedom to take control of your choices. Plus, it's incredibly motivating to track your progress and watch your savings grow over time. Living below your means is another concept that's often misunderstood. People think it means giving up things that you enjoy, but it's really about prioritizing what really matters to you. Living below your means doesn't mean you can't enjoy life. It means you're choosing where your money goes with intention. Start by setting a realistic budget that covers your fixed expenses, debt payment, and savings. Any money left over is discretionary spending. And instead of reaching for credit, consider saving up for a big purchase. For example, if you're planning a vacation, set aside a bit of each paycheck until you have enough money to cover it. This way you can fully enjoy it without the stress of going into debt. Paying with cash instead of credit can also be a powerful tool. Cash makes the spending feel more real. which helps you stay grounded. Next, for the price of free $99, you can subscribe to my YouTube channel and you'll get 2 free videos each week with plenty of financial tips, tricks, and some of the latest finance news to stay informed. All right, let's continue. Let's shift gears and talk about the importance of an emergency fund. This is one of the most crucial financial safeguards you can set up. Life is completely unpredictable, and unexpected expenses like car repairs, medical bills, or even a sudden job loss can throw a wrench into your financial plans. An emergency fund acts like a cushion, giving you a sense of security. Start by saving 3 to 6 months worth of living expenses. I know that might sound like a lot, but you don't have to do it all at once. Start small and just build up over time. A good strategy is to open a separate savings account just for emergency funds and set up automatic transfers from each paycheck, even if it's just like $25 or $50 at a time. The small contributions will really add up over the time. Avoid dipping into this fund for anything other than actual emergencies. Think of it as an insurance policy you hope you'll never need. Having an emergency fund not only helps you avoid debt when unexpected costs arise, but it also gives you that peace of mind. Debt can feel like a huge weight, but with the right approach, you can manage it effectively. Start by listing out all of your debts, including credit card balances, loans, and interest rates. It's important to make at least a minimum payment at each account, and then focus any extra money on the debt with the highest interest rate. This is known as the debt avalanche method, and it helps you pay less in interest over time. Also, keep an eye on your credit utilization. If you use more than 30% of your available credit, it'll really lower your credit score, and that'll limit your financial options. Try to keep the balances low, and if possible, pay off your credit cards in full each month. Managing debt wisely not only saves you money in the long run, but it also opens the door for more financial opportunities. One of the best ways to grow your wealth is to invest in yourself. Think of yourself as your most valuable asset. Improve your skills, gaining knowledge, and even taking care of your health can increase your earnings potential and your quality of life. You can't take your money with you when you go. Start by setting money aside for personal development, books, online courses, or even building a side hustle. A personal spending plan can help you allocate funds towards these goals. And don't forget to take good care of your health. Good health not only boosts your productivity, but it also helps you avoid costly medical bills down the road. Invest in your network, and seeking mentors who can guide you is another valuable step. Learning from those who have more experience can save you time and help you avoid common pitfalls. Over time, these investments can really compound, leading to better career prospects, higher income, and more opportunities. Speaking of building your wealth, let's talk about homeownership. For many people, buying a home is one of the biggest steps they can take towards financial security, and for good reason. Studies show that on average, homeowners have significantly higher net worths than renters. In fact, the difference is substantial. According to a recent report, the average homeowner's net worth is roughly 40 times greater than that of a renter. A staggering figure that highlights the wealth building power of homeownership. Owning a home isn't just about having a place to live. It's an investment. Each mortgage payment contributes to building equity, which is essentially the amount of home that you own outright. Over time, as property values increase, so does your equity. Renting, on the other hand, doesn't provide this financial return. Once you pay rent each month, that money is gone. Homeownership offers the dual benefit of providing a stable living environment while also acting as a financial asset that typically appreciates over time. For many people, buying a home can be an essential step towards building long-term wealth. Now, homeownership isn't for everyone, and it's not something to rush into. It's a big commitment with upfront costs like a down payment, closing costs, and ongoing expenses for maintenance and repairs. But if it aligns with your goals and you're in a financial position to take it on, homeownership can be one of the most effective ways to build your wealth over time. Impulse purchases are another big budget killer. We've all been there, seeing something we really want and just buying it without even thinking twice. But impulse spending can derail even the best laid financial plans. Before you buy, ask yourself if it's something you truly need. If it doesn't fit in your budget, consider putting it on hold. Wait a couple days and see if you still really want it. For bigger purchases, create a savings plan instead of relying on credit. You can open a separate account for big expense like vacations or new gadgets and set up automatic contributions each month. This way, you can make those purchases without the financial stress of paying off debt. And there you have it, some of the most impactful personal finance lessons that have truly shaped my financial journey. Whether it's understanding your money mindset, setting up a budget, or building an emergency fund, or even living below your means, each one of these steps can help you gain control over your financial future. I hope you found these insights helpful and that they inspire you to take some positive steps in your own financial life. If you enjoyed my video, please consider giving it a thumbs up, leave a comment below, and subscribe. It really helps my channel and push it to a broader audience so I can keep making videos like this. Thank you so much for watching, and I'll see you next time.